buying stock for land. Put company issues 500 shares of $100 preferred stock to Drive Corporation in exchange for land on December 31st. The land was carried on Drive's books for $40,000. Prepare the journal entry to record the acquisition of land in each of the following independent situations. Preferred stock is currently selling at $120 per share. No appraisal is available on the land. So in this case, we clearly just have to use the $120 per share because no appraisal is available, and really that $120 is our most accurate, faithfully represented number anyways. So we will have a debit to land equal to our 500 shares, that's 5,000, times 120 per share for 60,000. And then we'll have a credit to preferred stock and to our additional paid in capital preferred stock. And this is at the preferred stock is going to be credited at par, so at 100, so 500 times 100 and 500 times 20, or the difference, and then we're balanced out. Ooh. Okay, then in B, we have the land is appraised at $65,000. There have been no recent sales of preferred stock. So in this case, the ideal situation is to use stock first. The second best thing is to use the fair value of the asset that we're trading, or the land. So we have that, and that's what we'll use. So we're still debiting land and crediting our preferred stock and additional paid in capital on the preferred stock. This time the land is $65,000. The preferred stock is still going to be $50,000, which leaves $15,000 for our additional paid in capital. And we could, I'm going the wrong direction. We could, of course, say 65,000 divided by 500 shares gives us a price of $130 per share, 100 of which is preferred stock, 30 of which is that additional paid in capital. So we can confirm this number by saying 500 times 30. I get that same 15,000. All right, and the stock is currently selling for $125 per share. The land is appraised at $64,000. So they're giving us a market value for stock and for land, but in this case, we're just going to carry forward with the stock because that's considered the most faithfully represented value. And so the land is going to be 125 times our 500 shares. The preferred stock is still going to be the 500 times 100 par value. And the additional paid in capital is going to be the 500 times the difference, or $25 for $12.50. And there we have it.